Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, June 13th, 2011. This morning I'm talking about here we go again. And first I want to take a look at the Kiwi dollar, and we're looking at it here, and you can see overnight Kiwi sold off. All right, they actually got hit with another earthquake. All right, there were two earthquakes, one of magnitude of 6.0, the other I think was 5.2. Again, in that city of Christchurch, the second largest city in New Zealand. So that's obviously going to delay the rebuilding efforts from the first earthquake that's gone around. All right, and I haven't seen any official numbers here on what the extent of the damage is, but that ticked the Kiwi down right there, because that could further delay the interest rate hikes that the markets were betting on. Okay, so you can see the Kiwi's down here. You can also see it's down pretty good versus the Aussie. We'll just show you this on the 30-minute chart. You can see how this is changed here. So you can see that was in a nice downtrend. Aussie was selling off, and then boom, there goes the earthquake right higher. So that's craziness. All right, so we're looking here at the euro. Okay, euro came down to 143 last week, sitting just marginally above there, but the trend on the intermediate term looks clearly down. They're obviously still having problems, figuring out the debt crisis in Greece. You've got Germany versus the rest, and they're trying to figure out, do bondholders take haircuts? If bondholders take haircuts, does that constitute a default? And they're going back and forth. But the hope is that they're going to be able to get this done by the end of the month, where, right now, I got to tell you, it doesn't look very good for that happening at this point. So we're going to have to see what happens there as far as what this resolution is going to be. But the market's very jittery about the euro and what's happening there. So we're going to get some other news from the euro, some industrial production figures midweek, and toward the end of the week we're going to get some CPI data from looks like Italy. But there isn't a ton of the consumer price index, the inflation data for all over the eurozone. That's coming out on Thursday. Apologies. But other than that, it doesn't look like there's a ton of news coming out of the eurozone, with the exception of this Greek debt crisis. Now let's take a quick look at the pound here. Pound versus dollar. You can see pound got down to just above 162 last week. We're pushing a little bit higher. All right, there's actually a decent amount of news on tap for the UK this week. All right, we've got CPI data coming out tomorrow, where they're expecting it to be remain high at 4.5%. All right, we know that's more than double the target. All right, then we also have the retail price index, shop price index, housing prices. Okay, and then on Wednesday we're going to get the unemployment rate in the UK. So they're looking at about 7.7% right now still. All right, and what we're seeing in the UK is that data's been weak. Okay, that it looks like the Bank of England wants to keep monetary policy steady, but stories are actually being floated that, hey, wait a second, we just had this huge royal wedding that happened a little while ago, and they're trying to blame some of the weak economic data on those on the wedding and that kind of stuff. So factory production, manufacturing production, industrial production figures that were weak last week, well, that could potentially be the result of everybody hanging out and partying for a week or two because of this wedding. So who knows? We'll have to see what the data looks like going forward, but right now it looks like the pound looks a little bit more attractive than the euro, and we can just take a look here and we can see euro versus pound. All right, and that trend has been pretty rocky on the way down, but nevertheless in the intermediate term it is lower. All right, we've got Japan. The Japanese yen here is actually it's weakening a bit, but you can see that there's still it's still hanging around this 80 level, and that's still pretty strong for the yen, even though it looks like we're bouncing off some of these lows. I mean, you got to remember, this is not that big of a move here. 79, 75, say, up to 80, 50. Now we're pulling back a little bit from there. All right, Japan obviously still having problems. They're still talking about Bank of Japan easing monetary policy, whether it's through asset purchases or some sort of intervention, or who knows. But right now it's sort of all over the board. It makes obvious sense that they should do something to try and jumpstart the market. They had machine orders that came in earlier this morning. They were down 3.3%. They were expecting a gain of 1.7%. So that's showing slowness. Also, we've got tomorrow, we've got China coming out with their CPI index. Now that could actually affect Australia, because if CPI is high, all right, there was some talk that perhaps China was going to raise interest rates over the week, or over the weekend. They may or may not do it, but if they do, that's going to be negative for the Aussie, negative for the Kiwi. That's going to put further pressure on stocks and commodities, so we're going to have to keep an eye on what's going on there. So last week the dollar had a pretty decent run, and this week we're going to see out of the U.S., we're going to get advanced retail sales figures. Those are coming out, I believe it's tomorrow. Let me double check that for you. Advanced retail sales tomorrow. Yep, those are expected to decline. Now, just remember that we've got, the consumer, which is some 70% of GDP under normal circumstances. So if advanced retail sales are shrinking, that means that consumer consumption is shrinking, which means that we're probably looking at much lower GDP figures. All right, so that's retail sales figures on Tuesday. All right, and then we're going to get U.S. CPI index on Wednesday. All right, and that's going to show inflation, both the headline and the core. All right, they're expecting the headline to be up at around 3.4%, which is higher. So, if it comes in around there or even hotter, it's going to show that we're really heading towards that stagflationary environment where prices are going up, economic activity is not, and frankly, we're in the middle of the summer where these talking heads in Washington, they're on the golf course already. Insulated from what's going on in the real world, and it could be pretty detrimental to the economy going forward. So that's really what we're looking at this week here. I think the big news is going to be keeping an eye on the euro debt crisis and what comes out of that. I mean, they're trying to get this done by the end of the month, but that literally gives them 2 weeks left. So good luck with that. And then also we've got China here tomorrow. If China's inflation is high, then they may have to cool down again, which could mean raising interest rates, could mean doing a lot of different things there. So those are the two I'm keeping an eye on right now. Just kind of playing these shorter term ranges back and forth. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.